Okay, well, we're talking about you know, your role and how these things may go and why firms may make the offer. So maybe what are the main motivations for M&A activity?
The main motivations, well, I talked about it for a second when we talked about the strategic rationale.
Right.
So a lot of times it's around a drive for scale.
Right.
And really pursuing those synergies. And sometimes it's just as simple as being able to cut G&A out of the company, out of the combined business, and save some costs there. But that alone usually isn't a strong enough reason for companies to be together. Another reason there could be a capital markets rationale. For example, when we look at the customs brokerage business, back in the early 2000s, we had a couple of public companies that were competitors. One was about twice the size of the other one. But as far as the capital markets were concerned, they were doing exactly the same thing. And the capital markets basically said, we would rather have one larger, more liquid customs brokerage company than two smaller illiquid companies. And so the capital markets were sort of saying, demanding more liquidity. And of course, when you have larger, more liquid companies, what tends to happen is their valuations tend to go up, all other things being equal. Right. So there is definitely a correlation between size and liquidity and valuation. So you can actually unlock valuation just by getting bigger, just by increasing the amount of trade in the stock, and by increasing the market cap, maybe get big enough to be included in a larger index, and then you've got index buyers sort of driving demand for the stock. So there are some capital markets factors that can lead to multiple expansion for larger companies. The second thing is that, well, there are numerous, types of rationale. But the other one is when we look at, for example, the Petro-Canada Suncor deal, there were a few things that drove that. One of them was the idea of creating a multi-billion-dollar national champion oil company, integrated company that had, absolutely killer scale. There was some rationale for that. There was a little bit of a management succession issue that was driving that deal as well. Yep. Where the CEO of Petro-Canada was getting close to retirement age, and there was just sort of this idea of kind of having a different management team manage the combined assets. The other thing was that both of those companies on a combined basis had literally tens of billions of dollars of oil sand development projects that they were looking at. And when they put those things together and they had a larger portfolio of projects, they were able to go into a position where they could start to high grade those projects, which is a little bit more, I don't know how much detail I should be going into that with that, but what I would say is that when you have a wider range of projects that you can pursue, you can prioritize them differently, and you can actually unlock value. And then the other thing on the project front is that when you're large, you have more buying power around the engineering firms, around the materials, even around the labor to some extent. So you can, on a combined basis, you can kind of manage the labor force better on those huge projects rather than competing for labor. So all those things were factors in the Petro-Canada Suncor deal, for example, which was a very large-scale deal that unlocked a whole lot of value for sure.
So some synergies and some economies of scale. And
well, there was definitely synergies and economies of scale, but in order to drive them, just saying, hey, there are synergies, we can fire people, that's not a strong enough, you've got to be really clear
in other
on
ways other than firing
capital
people,
synergies, right? Yeah. So what's interesting about that is that they could reduce the capital expenditure that they needed to make it pace that a little bit better. But also they were able to position those projects so that their return on invested capital in building those projects was actually better. Right. And that unlocked a lot of shareholder value for them, beyond just cutting expenses and firing people.
Right.